Hi, hello, welcome friends. In this video, I am going to discuss some interview-based questions for CA freshers who are attending the interviews in the investment banker side. So, firstly, they may ask for your what is about yourself, or if you are a CA fresher, means they may ask about your education and your family background. And next, you need to done the articleship. No, that articleship. What are the points you have observed in audit? What are the points you have did find in audit when you are doing the articleship? That may normal questions they may ask in for CA persons. And after that, if you go for normal subjective questions, they may ask private equity and hedge funds overview. And entries, they may ask for some entries related dividend on ex date or payment date or prepaid expenses and outstanding expenses, etc, etc. Some entries, general entries may ask. If you are going for manufacturing company and they are start purchase one machinery, and when the machinery was put to use is another day, and from when machinery will be depreciated, they may ask. So purchasing on one day and put to use in one day, and payment was day in some days. And example they may build one scenario. So purchase date and execution date, order date, and put to use date. They may ask in when do you get the recognition of machinery and date of depreciation, and what are the corporate actions. So corporate actions, what are there, and difference between stock dividends and bonus issues. So what is meant by stock dividend, what is meant by bonus issue, and difference between the stock splits and consolidation. So stock split means what, consolidation means what, why the company will do this stock split and consolidation. So, and some cases that what is features, what is options, give some definitions and examples. And in options, what are the options you buy, and when market is falling. So when market is falling, which options you are going to buy, and they may ask. And some CDS and TRS means what is this CDS and TRS. And some may ask for reasoning questions. So they may be 1 is equal to 5, 2 is equal to 25, and 3 is equal to 125, and 4 is equal to 625. What is 5 is equal to? This type of reasoning questions will be asked. So these are the questions may ask in the interviews. So you need to answer the answers in following way, which I may provide in example with some definitions with examples. You need to build up your own. So first they may ask for about your family background, that you need to provide brief details about yourself and your education, and you recently completed some standard accountant which you have a strong academic foundation. So mention some specific subject and focus areas. So for example, if you are going for investment bank, you need to focus on SFM subject. So you need to mention some specific subjects. That is, SFM is my favorite subject. In SFM, this chapter I have followed regularly. If you are going for hedge fund accountant, you need to mention that mutual fund is my favorite chapter in SFM. If you are going for investment bank, you need to mention about the corporate actions, mergers and acquisition chapter, and derivatives is my favorite chapters in SFM. I have thoroughly followed in SFM. You need to mention that cases. So then interviewer perception will be okay, he has know about the subject, theoretical subject. We need, and you need to mention that I know some theoretical knowledge, and I want to apply that theoretical into practical. So you need to mention that points and focus that areas. So first point will be your family background, and you completed recently, you are going, now I have a theoretical knowledge and I want to get into practical. You need to mention that. Next, after that, what are the points you have observed in articleship? Now doing my articleship, you need to provide that, identify key audit points, what you are done, and you need to mention that relating to internal controls, relating to verifying the financial transactions. So you need to mention the role related items. So that internal controls of financial transactions and ensuring that compliance with accounting standards. So notable areas will be mentioned, and if you have done the specific basic regulations, rules, even stock exchange, so you need to mention that. If you are participated in any IPO process, document writing, that PPM, that is private document, or any prospectus, if you are done, you need to mention that points also in article. Next, what is private equity or hedge funds? Private equity means always a private company to generate a return and often through have operational improvements. So private equity means investing in private company. Private companies investing, or from public to private company, you need to invest and you need to get the return, generate the return, and you need to improve their operating efficiency. That is private equity. Whereas hedge fund means pooling capital from with the accredited investors who has high net worth persons is there from that person. You need to get the capital to employ various strategies. So here the strategies may be maximize your return. So in private equity you need to generate the return, in hedge funds you need to maximize the return, and here the crucial role will be financial market aiming for profitability through different approaches. So the different approaches where there may be a different condition, there may be a bullish market or bearish market, you need to get the profit in both market. That is the hedge funds main objective, main aim to get in any market. You need to generate the maximum return. That is the hedge fund main aim. And next, dividend entries. What is the dividend entries means? On the X day you to recognize the liability. So in the X date you need to recognize the liability. On the payment day you need to record the cash outflow. So there will be two entries for dividend entries. So on the X date you need to recognize as a liability, and when you are paying you need to record the cash outflow. Debit what comes in, credit what goes out. So first entry will be dividend payable entry, and second entry will be and dividend payable account debit to cash. And first entry it will be profit and loss account debit to dividend payable entry will be posted in dividend entries. And whereas prepaid expenses means it is a current asset, so it need to recognize as a asset, and you need to expense over a time while outstanding expenses are recognized when it incurred. Next, whereas machinery related cases. So machinery when it is received, so when the received, it is the point when the ownership and control will be transferred. So that is the machinery received date, means ownership and control will be transferred date will be machinery received. And depreciation would start from the date of machinery is put to use. So when the machinery is put to use, then depreciation will be started. So machinery received will be, and when the point you get the ownership and control, then machinery was transferred to you. And from when to recognize the depreciation, from when the date you get the put to use, sorry, you have put to use machinery, then from that date you need to get the depreciation, you need to recognize the depreciation means what, using the tangible assets you need to depreciate, means vary and touring, example. Next, what are corporate action? Corporate action means it is one action or it is one event that will be initiated by the company, and it will impact its securities, shares, and it will impact. So it may include stock splits, dividends, mergers, acquisition, etc. Next, after that, what we discussed, that stock dividends. So in stock dividends involves issuing additional shares to existing shareholders. So what will happen in stock dividends? Stock dividend means issuing additional shares to existing shareholders. Who are the existing shareholders? From that existing shareholders will be issued some stock dividends. And stock dividends, while bonus issue means, so stock dividend means issuing additional shares for existing shareholders, but whereas bonus issue means providing additional shares without charge. So they will not have any charge and they will issue additional shares. Here, the key difference is stock dividends are paid from retained earnings. So, stock dividend will be paid from retained earnings, while bonus issue from capital reserve. So, for bonus issue, we will use the capital reserve. For stock dividends, we will use the retained earnings. That is the main difference in stock dividend and bonus issue. So stock dividend means issuing additional shares. This is for to existing shareholders only, and out of which we will use from retained earnings we will use. Whereas bonus issue, it is additional shares without charge, so we will not charge any amount, and it is from capital reserve. That is the stock dividend and whereas bonus issue. Next, stock split means increasing the number of shares outstanding, reducing the share price proportionately. It is often done to make shares are more affordable, so making the shares are more affordable. So what is it? For example, if you have a share price will be 1,000 rupees, and it will make share price will be 500 rupees. By taking the 1,000, we will give the 500 notes. So this is stock split. So we will splitting the price when the price is low, so more person interested to buy that shares. So that Tata company shares is coming for only 500, so we will try to purchase that case, so proportionally the price, so it will making the shares more affordable to more persons. And whereas consolidation means it is opposite, that is decreasing the number of shares and increasing the share price. Decreasing means here what we can do, so the share price is 1,000, we will make it as 2,000 and shares will be decreased. So decreasing the number of shares and increasing the share price, it will be consolidation. So typically to meet listing requirements or enhance stock perceptions, we will do this stock split and consolidation process. So stock split means increasing the number of shares outstanding, reducing the share price, so share price will be decreased in stock split. And whereas consolidation means decreasing the number of shares and increasing the share price, that is consolidation. Next, futures means it is one financial contract obligation the buyer to purchase or seller to sell an asset at predetermined future date and price. So in future contract, there will be a contract or there will be a agreement, and it agreement mention that the obligation to the buyer to purchase and obligation to the seller to sell at one asset at a predetermined future date and price. So at after the 3 months, then that day you need to give this asset for this price. So they will mention the price, they will mention the date, and they will prescribe the assets, and they will give the perceptions and terms and conditions at that contract. It is future contract. So for example, is an investor agreeing to buy a certain quantity of commodity at a future date for a specified period in future contract. Next, where has options? So option means give the holder the right. So here holder will get the right but not obligation, so only the right, it is not obligation. So they may buy or sell an asset at predetermined price, so price will be determined at before getting, so price will be decided when the market is falling. So if the market is falling, one might consider buying put options to profit from the decline in the asset value. So we are asked that if the share price is falling, which option you should take now. For market is falling, one might consider the buying put option to profit from the declining the asset value. So you need go for put option. So option means we have two options, one is call option, one is put option. So call options, a company get the right, and whereas put option, this investor will get the right. So if we are market is falling market, put option is the best option, and you when the market falling and you this from buying put option, you will get the profit from declining the asset value. Next, that what is their CDS and TRS. CDS means credit default swap. So credit default swap means, and TRS, that is total return swap. These both are financial derivatives. So financial derivatives, what CDS means, credit default swaps. TRS means total return swaps. Swap means what? Exchanging. Means fixed rate to float rate, half float rate to fixed rate. That exchange will be there. That exchange is known as swap option. So credit default swap and total return swap, it is both are financial derivatives. So CDS means is a contract that provides insurance against the default of borrower. So who have borrowed some amount and they may default, so against that default they will provide the insurance. So we have the credit default, for that person it will provide the insurance. This is known as CDS contract. Whereas TRS means total return swap, that is allow an investor to gain exposure to the total return of an underlying asset without owning it. So you will not get any ownership on that asset, so you will get the gain on that exposure, gain on the total return underlying asset. That is TRS, that is total return. Hello. And lastly, we have told that one reasoning question na, that is 1 is equal to 5, 2 is equal to 25, 3 is equal to 125, 4 is equal to 625, 5 is equal to what? So here the pattern suggests each number is raised to the power of 5, that is 5 square is equal to, now 3125 will be the answer. So 3125 will be the answer. If you see, firstly 1 is equal to 5, 2 is equal to 5 square, so 25. Next 3 means 5 to the power of cube and 5 to the power of 4. Now we will go for 5 to the power of 5. It will become 3125 will be the answer. That is okay. So in next video we will discuss about more questions.